Let's get into another company within the resources space that's made headlines today. Sasol, a step closer to Canada's first gas-to-liquid plant. It's a new entrant within the Canadian energy space, but it seems making traction pretty quickly.
Well, I'm actually surprised with them continuing. A few months ago, there was talks about when the oil price started coming down again, there was talks about it not being sustainable investment, not looking at the return on the investment, saying maybe we should pull back from this investment. Going ahead with it, I think it's excellent news longer term. One would like to see Sasol as a shareholder. One would like to see Sasol diversify its income stream. Don't only want Sasol 1 to 4 as the main income producing assets there. And going into gas, I think it's a major shift that most of the energy producers in the world are making at the moment, and I'm glad to see Sasol continuing with that project.
Of course, what's been in the spotlight is where they're choosing to get into gas specifically. I mean, we know their focus is in North America, Canada as well. And here in South Africa, when that moratorium was placed on shale gas production in the Karoo, they stepped back. Now with that moratorium being lifted, is this the opportunity that they need to jump back into, Gerhard?
I have my doubts, you know, politically, socially, to get into South Africa is a dangerous place to go. There's such huge opposition to fracking in the Karoo and gas operations there. The latest reports came out very negative. Some of the scientists changed their mind to be negative, and I think that's. I wouldn't put too much money on a bet that there will be gas exploration maybe, but fracking there. I mean, water is so short supply in the Karoo, and this method uses a lot of water. So I'm not sure where they're going to find the water. You can't pipe it in from the sea or something, it's too far. Yeah. But so I think this is a project that will probably never get off the ground. So I think one should rather focus on Sasol's other attributes.
And the main thing is the big regulatory difference. In Canada makes it extremely easy for companies to do exploration there. They get a lot of tax subsidies, and they do well. If you're trying to organize investment in Canada, you can approach the ministerial department directly. You know, you'll get the minister, investment this size, you'll get the minister around the table, and for instance, you'll get the Minister of Environmental Affairs, you'll get the Minister of Mining and Mineral Affairs, and you'll get a few guys in the same room. They'll sort out, they'll make it happen. The regulatory and the investment environment, especially in Canada, is much better than it is locally.
It's so different to ours.
And you know, this now it just adds another company within the resources space that's finding it difficult to do business in South Africa, and lends to that argument of investments just not coming in where we need it to be. Yes,
I was at a junior African mining in Durban a few months ago during the big mining in Durban, and I saw the research there, or the slides showing where exploration money is being spent. South Africa falls under other now. West Africa, there are countries where huge exploration spending and mining spending is. The environment, they're inviting the people. In South Africa, they're trying to make it so difficult for you. The politicians would say something, but then, you know, minimum wages, you've got all these licensing fraud. I mean, it just boggles the mind that you actually say that you're open for business.
Of course, influencing investors' decisions is not only how much you're investing, it's where you're investing to, just how tricky that investment is going to be for a company, how long it's going to take before you get a return on that investment. Drikus, when you're looking at Sasol, then, given the decisions it's made and the investments it's made already, its kind of strategy on a global scale, 387, is it a company that you'd be buying into?
Well, Sasol does offer value over here. At the moment, it's been discounted as a normal energy company, which I think it is not. There's a certain proprietary technology within Sasol that they can use to their benefit. If they get into Canada, if they get into US, where their focus is at the moment, I think there's a lot of upside. Of course, you're talking about huge capital projects. Sasol is a big company, but not large enough when they really do get a huge offer on the table in the US, they will need more capital. So I think most of those will be sort of joint ventures with other companies like ExxonMobil or Chevron. It will be joint ventures, and I do see upside in the long term. In the short term though, before any of those capital projects get off the ground, for the next 3 years, I don't see any upside in profit growth. Having said that, with the proper dividend yield and a PE of about 9, I would not stand in anybody's way buying this company.
This is in a context where Drikus and I were talking about his strategy earlier, and he was saying, Gerhard, that he's finding it hard to find value in the local markets right now. They've been moving a lot of their funds offshore. Your view on that?
Yeah, especially industrial shares are pretty high, and even financial shares not cheap at all. There is value probably in a resource sector, but also, yeah, you have to be careful that earnings don't come down and the PE increases quite substantially then. I do think there's a little bit of value there, but definitely looking at overseas shares. Diversification there is, I think, a very good idea, because you can get many US multinationals at decent PEs with solid balance sheets. I looked at the luxury market. Richemont is not seen by many of the analysts as a good buy at this stage, but LVMH and Burberry are rated very good buys. So on the current valuation in South Africa, you have only got Richemont, but if you can diversify, then you can switch from Richemont to LVMH or Burberry, and I think that's becoming more and more important and becoming more and more of a investment choice.
Yeah, looking at what's on your radar screen, where exactly are you shifting to?
Well, we prefer multinationals listed on the European, UK and US markets. First and foremost, because you've got the right regulatory environments, you've got a big analyst environment or society following those companies, and it's much more transparent at the end of the day. We don't understand always the Chinese accounting. Japan has a sort of I don't know, there's a fraudulent culture when it comes to accounting. So we tend to stay away from those. We tend to focus on companies listed on the Western stock exchanges, which are discounted as if they're only doing business there, multinational companies. One case in point is if I can use an example, is Tesco. Tesco, which is a few times the size of Shoprite. Shoprite trades at 28 price earnings. Tesco is about a 9.5, 10 price earnings. They've had a few bumps and bruises the last 2 years. They're reinvesting into their UK business, but the UK business 60%, there's 20% in Europe, and then they've got a fast-growing Southeast Asia business division that's growing at 25% per annum. That's about 20% of the business. So you've got a nice balance there. In a few years' time, the Asian part of the business is going to be much bigger, and I think a re-rating is on the cards then. It's already trading 30–40% discount to the likes of Walmart. So there's a lot of opportunities out there. Tesco is a top quality company, and if you see any return GDP growth back in the UK, which it certainly does look like the UK will be coming out of a recession first, and you see some pickup in Europe, you'll definitely see some re-rating there. Well,
Drikus has really put the investment case on the table, and yet you've got a company like Shoprite, top performer, as I was saying earlier, on the top 40 yesterday, 2.8% gain coming through there, and that share price gaining further this morning as well. Does a move like that surprise you, continue to surprise you?
I think, you know, Shoprite is in a fortunate position that it's got the expansion in Africa that is probably going to do very well. Maybe not as well as Asia, but I think there's a lot of scope there, and that's why I think they justify a P ratio on this level. Having said that, there's obviously more risk on the downside than on the upside because of the high rating. If something goes wrong somewhere, the fall can be quite big. So not a sell, but I would not rate it as a big buy at this level.